Hello and welcome to this edition of the Ward's Intelligence 6-Minute Webinars. I'm Hake Stoddard, Senior Industry Analyst for Ward's Intelligence, and I'll be talking about the slew of new brands slated to come into the U.S. market in the next couple of years and the competitive impact they might have. The U.S. market, the second biggest globally, will be facing an onslaught of new brands coming into the market from the end of 2020 through 2022. While four of them represent expansions to the lineups of existing global manufacturers such as Geely, GM, and Hyundai, most of the new brands are startups, coming from companies entering the new vehicle market for the first time and mostly financed through private investment. Also, all but one of the new brands is selling just electrified vehicles, either battery electric or hybrids, with the majority of those being battery electrics. As with several proposed startups in the past, there is a good chance not all these new brands will ultimately make it to the market, and some that do will probably not meet the planned sales starts listed in the table on this slide. Still, the entry of these all-new brands is creating more competition in the U.S., especially in the area of battery electric vehicles. I want to somewhat set the table showing the environment these new brands are entering. This slide covers over 40 years of history for the U.S. market, with annual volumes adjusted to show as sales per brand. And accordingly, the number of brands selling vehicles in each year also is shown. What this illustrates is that over the past 40 plus years, long-term declines in demand are followed, even though sometimes not for a few years, by a consolidation of the number of brands selling vehicles. What's also interesting is that in the last two cycles, the industry pretty much kept to its consolidation. Or in other words, when sales went into a long-term growth mode, there was not an overreaction in terms of automakers rushing all new products and brands to the market. That's not to say there wasn't some noise in those years, as there were new entrants coming in, but usually offset by the demise of another. The bottom line is that once consolidation occurred, it largely remained intact. Looking at a snapshot of the previous slide with 3 years of forecasts added via our partner LMC Automotive, and including the addition of the new brands, the pattern of consolidation is about to be tested. As we all know, and many of you are probably quite sick of hearing about it, the COVID-19 pandemic tanked demand in 2020, and volume is expected to take up to 3 years to return to pre-virus levels. That's shown in the nosedive in sales per brand at the far end of this graph. Even though total sales volume is expected to grow year over year in 2021 and 22, the addition of the new entrants will drive down the sales ratio. From this point of view, the market is entering a phase where, based on history, there should be some weeding out of existing brands. Except in this case, there is a whole slew of new entrants scheduled to hit the market. But there are some caveats that are important to point out. First is the consolidation out of the last recession that brought the brand count down to levels not seen since the 1980s. While over the last 5 years, sales per brand ran at an average level nearly 10% above the last peak year of 2000, meaning that the industry might already have found a good balance, more or less. Another is that none of the new brands are considered to be high volume, based on LMC's forecast. Together, they are expected to hardly make a dent in market penetration, even as far out as 2025. From that point of view, there won't be that much pressure on other brands. Taking a more granular look, where these new entrants might have a competitive impact is in sales of battery electric vehicles. Basically, as I said, the vast majority of the new vehicles coming from these brands will be battery electric. The chart here shows forecast sales of electric vehicles per the number of brands, existing and new, that are or will be selling them. What it indicates is that while there will be growth in total BEV sales, the overall pickings will not improve all that much, which likely makes it tougher for the startups to succeed. To wrap up, there might still be some consolidation of brands in the years ahead, but not because of a heavy influence from the additional brands slated to enter the market in the next 2 years. Any short-term consolidation among existing brands will depend on how fast the overall market bounces back from the COVID-19 impact. Most new brands initially will be low-volume players, often filling niches, but even in a lot of those niches, they will be butting heads with strong and well-established brands that in many cases will be offering similar products. Which really brings the question back to how many of these new brands, especially the startups, will succeed, much less successfully launch in the US. And that wraps up this edition of the Ward's Intelligent 6-Minute Webinars. To make sure you don't miss any of our other webinars and to check out content in our Summer Festival of Automotive, click the link below and have a good day.